foreign investments. They're supposed to be a good sign, right? India has long been a hotspot for global investors. But now something strange is happening. FDI inflows are being offset, even reversed by capital outflows. So what's really going on? Is it just a temporary blip or a red flag for the world's fastest-growing major economy? Let's break it down. In FY 2023-24, India reported FDI inflows of around $70 billion, impressive on the surface. But here's the catch: net FDI, which subtracts outflows from inflows, came down to just $10 to $12 billion, one of the lowest figures in recent years. That means companies are not only investing less into India, but Indian companies and foreign investors are also pulling money out. In fact, outflows in some months nearly matched or exceeded inflows. So while the headlines boast of billion-dollar deals, the net capital staying inside the country is shrinking. So why is money leaving India? One reason is corporate repatriation. Big firms like Amazon and Meta are sending profits back home as global markets tighten. Second, Indian multinationals are investing abroad, buying assets, opening new branches, and looking for global diversification. Another reason is regulatory friction. Changing policies, tax issues, and compliance hurdles are making foreign investors cautious. Even startups, once the poster boys of Indian innovation, are seeing a funding winter, pushing international investors to hold back. Add to this a stronger dollar and tightening liquidity worldwide, and it's clear why capital isn't sticking around. India's not alone. Global FDI has been volatile in the post-COVID high-inflation era. Emerging markets from Brazil to Vietnam are seeing similar patterns, where capital enters aggressively, then quickly exits. But the Indian case is unique. Despite being the world's fifth-largest economy, India still struggles with long-term capital retention. Infrastructure bottlenecks, slow judicial processes, labor rigidities, and unpredictable tax enforcement all play a part. Plus, Southeast Asian countries like Indonesia and the Philippines offer easier rules and faster returns, increasing competition. So while India has the market size, it still battles the ease of doing business gap. The Indian government isn't ignoring this. Recent reforms aim to draw long-term capital by ending retro tax, launching PLI, and easing defense and retail rules. Also, digitization of approvals and the new labor codes aim to reduce red tape. But these reforms take time and confidence builds slowly. The real challenge? Convincing long-term investors that India is not just a high-growth story, but also a stable one. Until then, inflows will come with an equal or higher chance of outflows. Here's the good news. India's growth fundamentals remain strong. With 6.5% plus GDP growth, a booming digital economy, and a young population, India attracts innovation and investment. Sectors like green energy, AI, semiconductor manufacturing, and fintech continue to attract big players. So yes, the current FDI outflows may be a temporary correction, driven by global economic tightening and post-pandemic adjustment. But it's also a wake-up call. India must double down on reforms, infrastructure, and capital stability, or risk losing out to smaller but nimbler economies. So is it a blip or a warning? Maybe both. Foreign investors still believe in India, but they now demand more clarity, consistency, and confidence. If India rises to the challenge, it won't just attract billions, it'll keep them and build a truly global investment powerhouse. Do you think India will win the global investment game?